Hello, today we are going to talk about Indian stocks rally. On November 30th, the benchmarks for Indian equity ended higher for the seventh session in a row, reaching record highs amid sector-wide buying, with the exception of PSU banks. The Sensex reached 63,000 for the first time at close, rising 417.81 points, or 0.67%, to 63,099.65. At 18,758.30, the Nifty was up 140.30 points, or 0.75%. The market remained flat in the first half after a strong start, but last-minute buying helped indices reach new highs, with the Sensex reaching 63,303.01 and the Nifty touching 18,800 for the first time. Homegrown market proceeded with its journey for gains, supported by FI inflows, according to Vinod Nair, head of research at Geojit Financial Services. Investors are expecting a moderation in the pace of rate hikes, so markets will be sensitive to the Fed chair's remarks later in the day. He added that easing COVID-19 restrictions in China would provide relief to global markets and that an inline comment would assist in maintaining the rally. The Nifty gained 4.14% and the Sensex gained 3.87% for November. Read also, IPO of the Merge Crop Guard. On the last day, the offer was taken up 28.35 times, and the retail portion was purchased 19.7 times. Among the top Nifty gainers were Mandem, Hindalco Industries, Grasim Industries, Bajaj Auto, and Ultratech Cement. Indus IND Bank, SBI, HCL Technologies, ITC, and Sun Pharma were among the losers. All Nifty sectoral indices ended in the green, with the exception of PSU Bank, which saw a decline of 1.3%. The auto, energy, FMCG, infrastructure, and metal indices were up between 1.8% and 1.8%. The BSE Small Cap Index and Mid Cap Index both increased 0.6%. The Power Index increased by 2.3%, the Metal Index by 2%, the Auto Index by 1.7%, and the Realty Index by 1.5% on the BSE. TVS Motor Company, ABB India, and Indian hotels saw volume increases of more than 400% among individual stocks. GMR Infrastructure, Jindal Steel, and Mandem experienced lengthy build-ups, whereas Canara Bank, Glenmark Pharma, and Lant Infotech experienced brief build-ups. More than 100 stocks reached their 52-week high on the BSE. Oriental Hotels, Britannia Industries, Mazagon Dock Shipbuilders, South Indian Bank, Union Bank of India, ICICI Bank, Exide Industries, Dhanlaxmi Bank, and DCB Bank were a few examples of these. Outlook for the 1st of December. Gaurav Ratnaparkhi, head of technical research, sharekun by BNP Paribas after a brief consolidation near 18,600 to 18,700 over the previous few sessions. The Nifty broke through the barrier of 18,700 toward the end of the session. As it crossed 18,700, it gained new momentum. The bulls were helped by the expansion of the hourly and daily upper Bollinger Bands in tandem with the price action. As a result, the Nifty could reach 19,000 on the upside. On the negative side, the Nifty's short-term base is 18,700-18,600. Below this support area, the short-term bullish stance can be reversed. Santosh Meena, head of research at Swastika Investmart, says that despite the volatility in global markets, India's benchmark indices are reaching new highs. Even though the Nifty mid-cap and small-cap indices are still below their all-time highs, the market as a whole is working to catch up. The fact that the market is receiving support from new industries on a daily basis is the beauty of the rally. Indian equity markets will clearly outperform during the second half of 2022. Our fundamentals are strong and we have strong support from domestic money, so the trend is likely to continue despite our high valuations in comparison to most global peers. Stock-specific movements will result from the auto sales figures and the market's reaction to Jerome Powell's speech on December 1. The Gujarat election and RBI policy will then gain attention. The dollar index, yields on U.S. bonds, and crude oil prices will all play a significant role, in addition to the news from China that may continue to cause volatility globally. The market's overbought condition is the only cause for concern. Although there are no major indications of weakness, there may be a pullback or consolidation at higher levels. Technically, Nifty's immediate targets are 18,888 and 19,000, while strong supports on the downside are 18,700 and 18,500. As renewed foreign institutional buying propelled both benchmark indices to fresh highs, Shrikant Chauhan, head of equity research, Kotak Securities' sentiment turned extremely bullish toward the closing stages. Prior to the release of Q2 GDP data, positive sentiment was further bolstered by the opening of robust European markets. Technically, the Nifty is in the uptrend continuation formation and has a long bullish candle that is generally positive on daily charts. However, we can anticipate profit booking at higher levels as the intraday texture is slightly overbought. The decider level for trend-following traders will be 18,650, above which the index can move to 18,900-18,950. However, if the index falls below 18,650, traders may prefer to exit their long positions. Then it could fall to 18,600 to 18,550. According to government data released on Wednesday, India's infrastructure output increased by 0.1% year-over-year in October. The data showed that infrastructure output, which includes 8 industries like coal and electricity and accounts for nearly 40% of industrial output, increased by 8.2% between April and October. According to government data released on Wednesday, India's fiscal deficit for the 7 months ending in October reached 7.58 trillion Indian rupees, or 45.6% of annual estimates. According to the data, total expenditure was 21.44 trillion rupees, while net tax receipts increased to 11.71 trillion rupees. Finance Minister Nirmala Sitharaman set the fiscal deficit target for 2022-23 at 6.4% of GDP starting in April during the presentation of the annual budget in February, up from 6.7% in the previous fiscal year. According to 3 people familiar with the situation, India's Nera Energy has issued a tender to sell high-speed diesel or gas oil for the first time since September. They stated that the bid deadline for the 65,000 to 70,000 ton high-speed diesel loading between December 21st and December 25th is December 1st, with the bid validity timing on the same day. According to one of the 3 sources, the company previously sold October loading gas oil through a tender issued in September. A second of the 3 sources said that the company's November maintenance schedule at its Vadodara site was on track to end soon, which was why the tender was issued. Nera did not respond when contacted for a comment. On Wednesday, ahead of a speech by Federal Reserve Chair Jerome Powell, optimism over a possible loosening of China's COVID restrictions set the dollar on course for its biggest monthly loss since late 2010. The dollar fell from a 1-week high. Harmonized consumer prices only increased by 10% in November, compared to expectations for a rise of 10.4% and October's final reading of 10.6%, indicating the first monthly deceleration in Eurozone inflation since June of last year. It is still more than 5 times the target rate set by the European Central Bank, however, after nearly 2 years of near-relentless inflation growth. Markets may welcome any indication that the worst may be behind them. Headline inflation is still much too high and higher than what the ECB staff expected, but the direction of travel is important. Unless we get another energy or food shock. Headline is heading down quickly. Frederick Ducrozet, head of macroeconomic research at Pictet Wealth Management, tweeted, "Base effects will become more powerful from here." After rebounding from a 1-week low on Wednesday at $1.0319, The euro was last up 0.4% at $1.0366. It decreased by 0.1% to 86.30 pence against the pound. After reaching an overnight high of 106.90, the US dollar index DXY, which measures the greenback's performance against 6 major currencies, decreased by 0.37% to 106.48. Refinitiv data indicate that it experienced its worst monthly performance since September 2010 DXY with a loss of approximately 4.3% in November. Investors have increased their bets that inflation has reached its highest point and that the Federal Reserve will soon announce a softer stance on monetary policy. Not least because the world is likely to enter a recession next year. Prices for energy and oil are both lower. Some central banks have toned down their hawkishness a little bit. The FX market is looking to 2023 and seeing moderately reduced expectations for the severity of the global growth slowdown. BMO European head of FX strategy Stephen Gallo stated, "We haven't seen any crazy hot inflation data from the major G10 economies." At 18:30 GMT, Powell will address the Brookings Institution in Washington about the economic outlook and the labor market. At 13:15 GMT, private sector employment data for November are due. Investors, according to the markets, believe that the Fed will raise interest rates by just half a point on December 14th and by another 75 basis points with a probability of 63.5%. FedWatch, Bart Wakabayashi, a branch manager at State Street in Tokyo, stated, "The underlying message is that the Fed is not happy with where inflation and employment are at the moment. Powell will keep on deciding in favor hawkishness as of now." As the pair continued to consolidate following a bounce from a 3-month low of 137.50 on Monday, the dollar edged up 0.2% against the yen to 139.01 USD JPY. To $1.2002, sterling PUST gained 0.4%. The offshore yuan USD CNH gained ground against the US dollar, which decreased by 1% to 7.0802. Hopes of a less hawkish interest rate environment helped Indian shares close at record highs for a 5th day in a row on Wednesday, extending their daily rally to 7 days and recording gains for a 2nd month in a row. The two main indexes were boosted by a surge in the final half hour of trading. The S&P BSE Sensex and the NSE Nifty 50 Index Nifty both finished the day 0.75% higher at 18,758.35, respectively. In November, the Nifty gained 4.14% and the Sensex gained 3.87%, but these gains were less than in October, since the minutes of the last meeting of the U.S. Federal Reserve, which were released a week ago, raised expectations that the central bank might ease its monetary policy. The two indexes have been on a tear. In October, retail inflation in India also fell to a 3-month low of 6.77%, raising expectations that the Reserve Bank of India will follow suit and initiate its own rate hike path. The next important events in the near future are a speech by Fed Chair Jerome Powell at a Brookings Institution event later today, and India's July-September economic data later today. According to G. Chockalingam, founder of Economics Research and Advisory, markets will not react much to GDP growth rate, which is likely to be on expected lines, but could react more to the tone of Jerome Powell. Chockalingam stated, "Powell's tone will be modest, which could provide a further leg up to markets." He also stated that the majority of macro indicators, such as Rabi and Kharif output, tax collections, and banking credit, appeared to be robust, which may make it possible for the government to increase its capital expenditure. A Reuters poll indicates that the Indian economy likely returned to a 6.2% annual growth rate in July-September after expanding by double digits in the preceding quarter. On the day, all the clever sectoral records, aside from the PSU files CNX PSU BNK, progressed, with metal energy Energy and auto CNX CUTO climbing over 1.7% each. After a number of block deals, Varun Beverages VBL, one of the individual stocks, rose by more than 9% to a record high. Thank you for watching. For more financial news and info, don't forget to hit the